Hi, everyone, and welcome to today's webinar. My name is Jenny. I'm part of the marketing and events team here at AuditBoard, and I'm excited to host today's presentation. I'm pleased to introduce today's speakers. Richard Chambers is the former president and CEO of the ECIIA and the senior advisor at Risk and Audit here at AuditBoard. And Pascal Vandenbusch is the Secretary General at the European Chartered ECIIA. Before I hand the mic over, I have a few housekeeping items to cover. First, today's presentation slides will be shared with all participants. They are also available within the resource list on the left. Along the bottom, you'll find our most frequently asked questions, including solutions to common technical issues. If you lose audio at any point during today's presentation, please try refreshing your browser to reconnect. Today's webinar will have closed captioning. You can turn on the captions by clicking the CC button in the bottom right of the media player. We'd love to hear from you today during the presentation. If you have any questions, feel free to send them through the Q&A widget at the bottom left of your screen. We'll be answering questions at the end. And last, to qualify for CPE, you must attend 50 minutes of the live session and answer 3 time check questions. The time check questions will pop up on your screen and ask you to confirm that you are still watching the presentation. If you qualify for your CPE, your certificate will be emailed to you after the webinar. If you do not receive your certificate by the end of the day, please reach out to webinars@auditboard.com. And now, let's kick things off by welcoming Pascal.
Thank you very much, Jenny, and welcome and good morning or good afternoon to everyone. I think today's topic, the ethical internal auditors, is quite an interesting one. And we will debate on the ethics of the internal auditors. And that means mainly speaking about what is the professional ethical principle that internal auditors should possess to guide their ethical behavior. It will be about the profession, but it will be also about the dilemma that some internal auditors may see why they are auditing their organization. It will not be about the audit of the ethics, but nevertheless, I think that besides the profession code of ethics and standards, it's also worth mentioning that any organization has its own ethical corporate culture that is embedded in the value of the organization. That's also quite important, and that corporate leadership must establish the tone at the top on the ethical culture. So very important topics, and also a very experimented speaker today, Richard Chambers. So thank you, Richard, for being with us today. So Richard represents one of our key partners, AuditBoard, that is a leader company, a leader solution in audit, but also in enterprise risk management, in ESG, IT compliance, and third-party risk. And I also have to apologize for the other speaker that was planned for today, Massimiliano Turconi, who is the president of ECIIA. Due to last-minute issue in his own organization, he does apologize and will not be with us today. We will do our best together with Richard to discuss today on this important topic, and I'm sure we will. So now the floor is to you, Richard. Thank you for being with us.
Well, thank you very much, Pascal. You know, you and I go back many, many years. I can't remember a time when we weren't working together to further the interests of the internal audit profession in Europe. I greatly admire the leadership that you've brought there, as well as that of all of the other leaders of the ECIIA over the years. So it's indeed an honor to repartner with ECIIA, and I'm excited to be a part of today's discussion. Today we're going to talk about ethical behavior and integrity. Now, as internal auditors, it's not uncommon that we talk about ethical behavior and ethical integrity and auditing ethics, but we're normally talking about it in the context of other people. The difference in today's discussion isn't going to be that we're talking about the behavior and integrity of others. We're going to be talking about the behavior and integrity of ourselves, of the internal auditors and the internal audit profession. So during our time together, I want to talk a little bit about how we can sometimes find ourselves in the spotlight for the wrong reasons, because sometimes we make ethical missteps or members of our profession do. And we're going to talk a little bit about that. I want to refresh your memory about what the IIA's Code of Ethics looks like. Of course, most of us would know it because it's been around for many, many years. But with the advent of the Global Internal Audit Standards, which were released in January of this year, it has been repackaged, and so we'll take a quick look at that. And then we're going to talk about this whole concept of blind spots. And it's really the reason that I find that when internal auditors make mistakes, ethical transgressions, it isn't normally that they set out to do it. It's normally the byproduct of a blind spot, something they don't see that maybe others will see. And we'll talk about that. And then I've got some real world scenarios. I want to take us from the abstract to the concrete. I'm going to share with you some real examples of how internal auditors sometimes make ethical mistakes and what that looks like. And then I've got a few thoughts to share with you at the end. Well, it's not uncommon. As internal auditors, we certainly see it. The world around us is often racked with examples of companies and leaders and executives who have ethical failures where there is some serious transgression that results in the failure of the company itself. I've got a few examples up here. I try to keep this fresh and I try to keep it global. But some of the transgressions, some of those that go back a couple of decades, are just so iconic that they're hard to overlook. And even companies sometimes don't realize or can't see what they're doing, or the people who run the companies can't. I use the example in the slide there of Enron, which is now one of the most iconic scandals of all time, financial reporting fraud that took down one of the largest companies in the world. And I think it's interesting to note that even as a lot of ethical misbehavior was going on behind the scenes at Enron, they were still out there holding themselves up to the world as a shining example. In the quote that you have there from their CEO, they found they talk about their integrated audit arrangement was more cost effective and cost efficient than more traditional roles of having a separate internal and external auditing functions. What we later discover is that, in fact, the external auditor was also doing internal audit at Enron. So it was really a basket case of ethical challenges. And I think it's always interesting to note that others, we can see what others do. We can see the spectacular failures that come out of others and other organizations. But sadly, high-profile ethical lapses sometimes hit a little closer to home. They don't just hit the C-suite, the corner offices, or the boardrooms of companies. On some occasions, hopefully rare occasions, the internal auditors themselves make an ethical misstep, commit some fraud or misdeed. More likely, it's something that's not quite so serious to land them in jail. But the bottom line is we're no longer immune from that ethical spotlight either. I first started talking about this a few years ago when I was the president and CEO of IA Global. And the reason I did is that where I sat, there in the corner office of the IA Global headquarters in Florida, I had a visibility of this profession on a global basis. And it was with fair regularity that somewhere in the world, some internal auditor would get in trouble. And I used to cringe when I could hear the footsteps of the media and others coming to ask me what I thought of these internal auditors who had gotten in trouble, maybe even been arrested, maybe even taken to jail. And I used to say privately to my team, you know, I would rather people not know who we are or what we do than to think that the misbehavior that we see sometimes characterizes internal audit. So the bottom line is ethics is a serious business, and when internal auditors engage in ethical misconduct, it impacts us all. We're only as strong as our weakest link as a global profession. What you see there in front of you, and I realize the print is rather small, but these are all headlines, but they're not headlines about companies. They're not headlines about companies that got in trouble. These are headlines about internal auditors who got in trouble. You can see some of them talking about internal auditors being arrested. Others talk about that they're charged with some regulatory violation and hit with a fine. In others, they have been prohibited from serving in an internal audit capacity within the industry where they'd gotten in trouble. Increasingly, the ethics charges that come out of some of the misdeeds of big corporate entities, increasingly those will sometimes touch on the internal auditors of those enterprises. I've looked at this topic for more than 20 years, and I can tell you that when I look at it, there are certain things that are true in terms of connecting the dots. What are some of the common threads that run through ethical misdeeds? And here are the ones that I've seen the most frequently. Sometimes the internal auditor undertakes or commits some misstep because of a loyalty to a senior executive. Maybe the head of internal audit works for the CFO, and the CFO asks them to help conceal something. And so the internal auditor, maybe out of their allegiance and loyalty to that senior executive, maybe do find themselves caught up in the same scandal that ultimately brings down the senior executive themselves. A desire to protect the organization. We had a case here in America a few years ago where some university internal auditors had found some misbehavior on the part of the president of the university, and they did not put it in a report and they did not disclose it publicly. But of course, those things always tend to come out. And when it did come out, and when it was exposed, the internal auditors were asked, why did you not disclose that? Why wasn't it in your report that you found that the president of the university was filing fraudulent fraudulent travel reports, I believe, if I remember correctly? And the internal auditors had an interesting answer. They said, look, we knew that we could get this problem corrected. If we put it in the report, it would damage the reputation of the organization. So they concealed it, and their rationale was that they were protecting the integrity of the educational institution. And of course, nothing that sort of behavior doesn't tend to yield fruitful benefits. In fact, once the transgressions became public knowledge, not only did it damage the educational institution, it damaged the internal audit organization across the entire network of educational institutions. Protection of career opportunities is another one, and that is usually a function of an internal audit function, or that's usually the outcome of an internal audit function that doesn't enjoy the kind of independence that it should. And so we've seen chief audit executives and internal auditors undertake some kind of ethical misdeed out of fear that if they didn't do it, there would be some sort of retaliation, or that it would in fact damage their own career opportunities. Conflicts of interest, and we're going to explore some of these scenarios in a few minutes, but we've seen that there have been instances where internal auditors didn't do the right thing because they had a clear-born conflict of interest. They lacked the courage or integrity to confront those maybe who they knew were doing wrong things, and in failing to confront them, became guilty of ethical misconduct themselves. And then finally, the one common thread that I think runs through all of the examples we'll be talking about today is a disregard of the IIA's Code of Ethics. So let's turn our attention to the IIA's Code of Ethics for a moment. The new global internal audit standards, and I'm hoping that by now all of you are very familiar with them and you're well on your way to implementing them, because you really only have about 2 months left, right? They're going to be mandatory as of the 9th of January of 2025. Most of us will be okay on the ethics and professionalism standards because we've been living up to those levels for many years. But just to remind you, the new global internal audit standards organized around 5 domains: the purpose of internal audit, the ethics and professionalism, which is what we're about to talk about, governing the internal audit function, managing the internal audit function, and performing internal audit's work or the role of internal audit. So that's the way the standards are organized. Today, we're going to dive in for a couple of minutes here into the ethics and professionalism standards. And the standards themselves start right out by saying, look, ethics and professionalism principles comprise the internal auditor's code of ethics. And that adherence to these standards will instill the trust in our profession that we deserve, will help to foster a strong ethical culture within the internal audit function itself, and will provide a basis for reliance on internal auditors' work. If we're not seen as ethical, no one is really going to care what we have to say. So all of these are very good reasons why the IIA's Code of Ethics are so important. Then let's dive into the principles behind the Code of Ethics. The first principle is that we demonstrate integrity. Internal auditors have to perform their work honestly and courageously. We have to respect and contribute to the legitimate expectations of the organization. So it doesn't mean if somebody's trying to get us to do something wrong, that just because the organization may expect us to do something wrong, we should. It's only that we respect and contribute to the legitimate needs of the organization, that we don't engage in activity that's illegal or discredits the organization or the profession of internal audit itself. The second principle is around maintaining objectivity. These are not new concepts. They've been around for as long as I've been in internal audit, which, by the way, will be 50 years next year. So the idea that we have to be independent and that's part of being credible and ethical, that's not new. But the standards remind us that we need to maintain our objectivity. We need to recognize and avoid actual or perceived impairments, and then we need to disclose those impairments if they exist to the appropriate parties before we do an audit. The third principle is to demonstrate competency. You know, we don't think about it, but if we undertake work for which we're not competent, that's unethical. And yet I see that happen all too often. Internal auditors, because they feel pressure to undertake an audit that maybe they're not qualified for, they're not just setting themselves up to generate audit results that are not reliable or that are incomplete or ineffective. They're actually committing an ethics violation, because the standards say we need to possess or obtain the knowledge, skills, and abilities to perform that audit work, and that we need to maintain and continuously develop the competencies to improve the effectiveness. Now, if you think about it, what the standards are now saying is if you don't maintain your knowledge, if you don't undertake continuous knowledge improvement, that's unethical. If you expect to be an ethical internal auditor, you have to continue to learn and grow and become better and more effective over time. The fourth principle, exercising due professional care. This has been in the standards for a long time. It wasn't technically in the Code of Ethics in the old version, but it now is. And it says, look, to be ethical, you've got to plan and perform your services in accordance with the standards. So if you're not following the standards, there's some question about your ethical conduct. I'm getting ready to publish a research piece next year that I gathered a lot of data on the profession in the United States. And 35% of those who responded to our survey said they're not going to be ready to comply with the new standards in January. I worry about how are they going to be able to carry out their work ethically if they're not going to have all of the standards implemented. We need to take into account the nature, circumstances, and requirements for what we're getting ready to do, and we need to exercise skepticism when planning and performing services. This topic of internal audit skepticism is a very important one, and there's a fine line between skepticism and suspicion, and we should always make sure we stay skeptical but not suspicious. The fifth and final principle is that we need to maintain confidentiality. We need to follow the policies, procedures, laws, and regulations when using information that we come into possession of, and we need to be aware of the responsibilities for protecting information and demonstrating respect for confidential privacy and ownership of the information. So those are the 5 principles that comprise the Code of Ethics. I would tell you that these standards comprise the Code of Ethics, and we believe that that you have to they instill the trust that we need to have in professional internal audit. So what do we see when we really look at internal audit? Because we say the right things, we have standards that reinforce that we are ethical. We talk about the importance of integrity and courage and doing the right thing. But the reality is that on a regular basis, there's some degree of challenge when it comes to being ethical and maintaining an ethical compass pointing in the right direction. And the reality is that those ethical transgressions often come from our blind spots. You know, the reality is, and I've been, as I said, in the internal audit profession long enough to know how we see ourselves as a profession. We rightly see ourselves as doing the good work of our organizations, of being the guardians of trust. That's how a lot of us describe ourselves. We would never do anything wrong. We're here to help the organization ensure that others don't do things wrong. We see ourselves as far more likely to disclose ethical misconduct than to misbehave ethically ourselves. So that's the way we see ourselves. But the reality is we're no different from any other human beings, really. I mean, we are a little more committed and dedicated to doing things the right way, but our minds are worked and wired in many ways like any other human being. And the human mind is subject to, and these are words that come out of a really nice a book called Blind Spots, Why Do We Fail to Do What's Right and What to Do About It. And in that book, the authors, Bazerman and Tinsbrinzel, say our minds are subject to bounded ethicality or cognitive limitations that make us unaware of the moral implications of our decisions. This idea of blind spots, I think most of us probably on this call today, we operate automobiles. We understand the concept of operating an automobile, and as you learn early in your journey as a driver of a car or a truck or some vehicle, you learn early that there is a moment in time when you're driving and a car is passing you or you're passing another vehicle that you don't see them. This is often referred to as the blind spot. You know, it's there, you just don't see it because your eyes are looking straight ahead, and maybe it's just to your left or to your right. It's out of your peripheral vision. I think that's the concept of a blind spot when we talk about it on the highway, but it's also a blind spot when it comes to how we behave. The fact is, in many instances, the ethical transgression is right there beside us, but we don't see it because we're looking in a different direction. In reality, our blind spots are exposed every day. And the examples that I showed you at the beginning of the of the session, all those headlines, those are the more extraordinary examples of where internal auditors commit an ethical transgression and get in trouble, and it becomes big news, or they go to jail. But the reality is most ethical transgressions are nowhere near that spectacular. They're often far less serious, but they're nonetheless ethical transgressions. These are the ethical transgressions that are often enabled by our blind spots. So I want to walk you through a few scenarios to help you begin to appreciate how you may not think of something you do as being a transgression or an ethical violation, but in reality it is. Good example came a few years back. We had a very, very high profile global company. It is actually in the retail industry. They were expanding their retail operations and opening up stores in other countries. And in the United States, we have, and I think you have similar laws in the European Union, laws that prohibit the bribery of public officials. You can't bribe a public official to do something on behalf of your company. And this, in our case, is called the Foreign Corrupt Practices Act. Some of you may have heard of it, the FCPA. And the FCPA has been in place for almost 40 years, I think almost 50 years. And it basically says any company that is involved in the bribery of a public official in any other country around the world, it isn't just here in the US, anywhere in the world that is guilty of the violation of the Foreign Corrupt Practices Act. So we found, we had an internal audit function of this large retail company discover what they thought was payments to local officials to expedite the construction or the approval of the plans and permits to construct some of their retail outlets in this country. And so they found this, the internal auditors did, they wrote it up in the draft report, and they showed it to their general counsel, to the attorney of the company. And the attorney said, no, you cannot say that those are Foreign Corrupt Practices Act violations. They are merely facilitation payments. We're paying these officials through the government entities to help us overcome some of the paperwork requirements and so forth. The bottom line is they were quite clearly, as it turned out, violations of law, but the internal auditors felt like they had to defer to the legal counsel. They took the general counsel's direction and didn't pursue it any further because the general counsel said to the chief audit executive, if you take this forward to the audit committee, we're going to come into the audit committee and tell them you're wrong and you're going to look very foolish and it's going to damage your reputation in the audit committee. So the internal auditors backed off, did nothing. Of course, eventually these illegal facilitation payments became known, and as a result, the company was fined $1 billion US, and it was a huge reputational hit. And of course, it became known, and even an article in the New York Times about how the internal auditors found it, but didn't go forward and report it. So example there, I think the internal auditors in their minds, they were deferring to the legal counsel. In reality, what they should have done is say, okay, let's both go forward to the audit committee and maybe we'll get the audit committee's final take on whether this is something serious enough. The second scenario is one that's not uncommon. I was doing, before I was the president and CEO of the ECIIA, I was the national practice leader at PricewaterhouseCoopers in America for looking at external quality assessments and doing EQA reviews under the ECIIA standards. And I found I was leading a team to do one of these reviews. And I found in one particular review of an engagement where there was clearly in the work papers indication that there were policy violations in the department where the audit was conducted. And I asked the internal auditor who did the audit, I said, okay, why didn't you put that in the report? Because it's in your work papers, but it's not in the report. And the internal auditor came back and said, well, I used to work with these people. I was in that department before I took on this role. I knew that they would correct the issues. And then he went on to say to me, and I also knew that it would damage our credibility as internal audit if it came out that I was in that department and we weren't following those same policies. Again, in hindsight, all of us are probably rolling our eyes thinking, well, of course that was an ethical violation. But in the mind of that young auditor who was guilty of that transgression, he was doing what he thought was right. He said, look, our objective is to get things fixed. If it's going to get fixed, why do I have to put it in the report and make everybody look bad? Well, I think we all know the answer to that. The third blind spot scenario, this one is one of my favorites because it's close to home. Early in my career, I headed up the audit function. I was a civilian at the Pentagon in the United States, a civilian auditor overseeing the Army's internal audit program, decentralized internal audit program. And we had offices in like 300 offices around the world, including some at the time in Europe. I got a call one day from one of our heads of internal audit. So I was over the entire structure, but each of these audit departments had their own chief audit executive. And I got a call from one of them, and she said, look, Richard, I have a question for you. She said, we just did an audit in the IT department, and we came up with a lot of really good recommendations that is going to make them more efficient and more effective in executing their responsibilities. And now the head of the IT has asked if our internal auditor, the lady who did the audit, could be assigned there for a few weeks to help them implement the recommendations. Because he said, or she told me, she said, the head of IT is concerned that if his staff are called upon to implement the recommendations, that they're going to see them as a threat because maybe there won't be as need for as many staff in the future. And so he said, look, could you, or she asked me, could I accept his request and send the internal auditor over? And my advice to her, in fact, I thought it more as direction, but I definitely considered it advice, is no, do not do that. Because if your internal auditor is seen as coming in and implementing the recommendations that came out of her audit report, I think it serves to undermine the potential objectivity in the future, and I think that you should avoid that. And so I think we had agreement on it. And then a few months later, I was sitting in my office one day, and I got this very official-looking letter from a U.S. court, a judge in a different part of the United States, compelling me to come to court to testify in a case where the employees of that Army facility had filed a lawsuit because the internal auditors had been brought in to do their work. And so the court wanted my testimony as to whether that was complying with the internal audit standards at the time. I immediately got on the phone and I called her and I said, Barbara, I thought we agreed that you would not send your internal auditor over there to implement these recommendations. And now I'm getting compelled by a court to come and testify in a matter involving this. And she said, well, Richard, I know we did talk about this, but she said they offered me all new computers for the internal audit function if we would send her over for just 4 weeks of work. She said, Richard, we've never gotten any computers here. And if I didn't take advantage of that, it would keep internal audit here in the dark for a long time into the future. And so in her mind, and I'm telling you, if she were on this call today, she would still defend her actions, because in her mind, she was looking out for internal audit itself. But in reality, she was committing an ethical violation because she wasn't following the standards. And as I told her at that moment, I said, now you have a bigger problem, because you have to not only go in and you have to not only pull your staff out, but you can't go back in there and audit the work that this auditor you sent in to implement these recommendations was responsible for implementing. The fourth scenario, this one's not an uncommon one at all. Internal audit is out there every day in their department and in their company auditing conformance or compliance with corporate policies that maybe aren't very good. This is particularly true in the travel policy space, okay? And so I saw an instance once where internal audit did an audit of travel policies in one of their departments in their company, and they found that they were not complying with certain travel policies, maybe use of class of airline coverage or the amount of money that people are getting for travel time and so forth. And I asked them, I said, why didn't you include that in your report? And they said, well, look, those are just not good travel policies and we don't follow them. So if we put them in the report, if we put in the report that that department is not following it, everyone's going to know we're not following it. And then it's just going to make us look hypocritical. So again, they're rationalizing why they didn't do it. But again, there's an ethical violation there. The fifth blind spot, I think this has become more common in recent months or recent years, where more internal auditors are rotating from one department to another inside the company. And I found a case when I was doing an external quality assessment where the audit of a department the report didn't include all of the things that were found there. And the internal auditor said, look, I didn't include that because that's the department I want to rotate to after I leave internal audit. And if I put that in there, they're not going to ever hire me to come to work there. So again, all of us would see that immediately as an ethical transgression. But the internal auditor in that case was simply trying to preserve opportunity for their next assignment, because maybe they had to rotate out of internal audit at some point. And if they felt like if they were too hard on everyone, they wouldn't have any place to rotate to. The sixth blind spot and the last one is not uncommon. I had a chief audit executive tell me once, look, this is the year we're supposed to get our external quality assessment. It's been 5 years, but we can't do it this year because we have a new CEO and a new audit committee chair. And if they see an external quality report with some criticism of internal audit in it, it's going to undermine their confidence in us. So for purposes of maintaining internal audit stature and the confidence of our key stakeholders, we're going to postpone getting that external quality assessment until they get to know us better. Well, again, not one of those things that you'd be very proud of if you stood back and looked at it in the context of ethics. Well, let me close out by offering some parting thoughts. You know, we have to recognize that we're internal auditors, but we're also human beings, and we are prone to behave in ways that serve our own interests. We try to be ethical, and we try to do the right thing, but sometimes it's difficult because we don't see what we don't see. You need to challenge your own thoughts and decision processes. I would encourage every person who's on this seminar, this webinar today, to start to think about those examples I shared with you and think about other things you do. Is there ever anything that you do that maybe serves your own interest, maybe isn't criminal or doesn't rise to the level of those people who got in trouble on the first slide, but nonetheless doesn't conform to the standards? Watch and challenge those around you. Don't let people around you off the hook. We need to hold each other accountable. Slow down and deliberate with yourself and others. Here's the thing, if you have to question whether something you're getting ready to do or an action that has been taken, if you question whether that was the right one, then it probably wasn't. So I would definitely include others in a conversation around it. Implement controls that force compliance with ethical decisions. Some audit departments require every internal auditor to sign a disclosure statement at the beginning of every audit engagement that they don't have any impairments. That's a good step. That's a good practice. And disclose potential ethical conflicts at the earliest possible moment. And remember, as I said earlier, we're only as strong as our weakest link when it comes to our profession and when it comes to your department, wherever you may serve. Okay, thank you very much. I am going to see if we have any questions that might have come along during the time that I've been talking to you. Jenny, do we have any questions that have come up?
Yes, thank you. Yes, so one question we got was, how do you spot potential unethical behavior during audit assignments?
I'm sorry, what was it again?
Sorry, how do you spot potential unethical behavior during audit assignments?
Well, I think maybe the question is pertaining more to how do you identify someone else's ethical misconduct? Obviously, there's plenty of literature, plenty of guidance out there about how do you do audits of compliance with policies, procedures, and how do you identify fraud or misconduct or corruption. Obviously, the purpose of today's discussion is to talk more about ourselves. So if the question is how do we spot any misconduct on the part of ourselves while we're doing an audit engagement, I think, again, we ought to be guided by those actual code of conduct, the code of the ethics and professionalism standards that I went through a little earlier. I think one of the things that we were going to do right after I spoke was to ask Pascal to reflect a little bit on what we might have talked about these last few minutes, and then we can come back to questions again, Jenny, if there are other questions after that. And Pascal, I'm also happy to address any questions that you might have had as a result of some of the discussions that we've had.
Thank you very much, Richard. I think it was all clear, and I can say that I completely agree with all that was said. I just wanted to come to maybe one word that is for me quite important as well, and I don't think I have heard it so far. It's about the moral courage, because I think that's really what we need as internal audit in the profession. And for information, as we are in Europe, I will use an old quotation, which is a quotation from the General George Patton that you might have heard about, who said that actually for him, moral courage is the most valuable and usually the most absent characteristic in man. So it's not just applicable for us as an internal auditors, but also I think for men in general. So coming back maybe and taking the opportunity of summarizing a little bit what is important for the profession, I can only convert to your point that the global internal audit standards are the warranty for ethical behavior and really the starting of the journey for us in terms of being an ethical auditor. I think also we should not neglect the fact that it's the importance of having all the internal auditors, regardless of their position, that adhere to the global internal audit standards. And that's the role of the chief audit executive to make sure that this is the case, to make sure that the right trainings are in place, to make sure that there is a right dialogue also between the different team members. And in my much smaller career than yours, Richard, I saw one of the best practice that I found quite useful, which was a chief audit executive that used to have, a permanent workshop with his team, specially dedicated to this topic, So after an audit assignment, he would just get all his people and discuss with them on any dilemma, any question they would have, or things they wanted to be guided regarding ethics and behavior they should have. Because I think, as you mentioned, we have different roles. We have an advisory role, we have an assurance role. We want to partner. That's something, as you know, that we promote as ECIIA. And on the other side, we don't want to be seen as a policeman, but this can also lead, I think, automatically to some behavior of being nice with the people, because we want them to look at us as a nice partner to work with and not as a police person coming with a checklist and giving a bad report. So these are also the things I think we should take care when we think about being an ethical internal auditor. Another point that you mentioned that I also wanted to emphasize, because as you know, in Europe, the corporate governance code are very important for our profession and are also an important source in terms of responsibility, accountability for the internal audit profession. I think that the involvement of the governance body and their support in terms of ethical behavior is also something very important for us as a profession, because it's very important that we can rely on their support in case we have an issue and in case we have maybe to announce bad things. Would you agree with that? What would be your point on that, maybe, Richard?
No, I think you're right, and you made several really good points there, Pascal. I think, at the end of the day, it's challenging to remain ethical, and this can become an even greater problem. And I didn't really speak about this during my time delivering remarks. The culture of the larger organization in which we work has a lot to do with how much latitude we have in ensuring we behave ethically. What we should never aspire or allow ourselves to fit into the space of the culture. We need to know who we are, what it is that we have to do, and how we maintain our own courage and integrity. You mentioned courage. I did talk about courage, but this idea of moral courage means that sometimes we may have to make some difficult decisions. I'd never encourage internal auditors to walk away as a first solution, but it has to be in our toolkit. At some point, if we find ourselves in an organization or a culture where it's difficult or impossible for us to be ethical, then that's not a healthy place to be. That's not where you want to be as a professional of any kind, certainly not an internal audit professional. So hopefully we don't have a lot of people on the call today who work in organizations like that, but I saw a question that came through a few minutes ago that was talking about this. How do we hold others accountable around us? And this is particularly true in the internal audit function. And I think it comes back to what I said near the end, and that is that we have to be confident enough in ourselves and confident enough in the mission of internal audit and what it takes to have an outstanding internal audit function to know that there's really very little tolerance that we can have for misbehavior or unethical conduct.
Thank you, Richard. And I just wanted to raise a final question before giving back to the audience. How do you see the impact of artificial intelligence? Because we see more and more internal audit departments starting their journey using it for efficiency and other purposes. There are also new questions that it will raise with the use of AI in terms of ethics. So what's your view? I know it can be a full webinar on this topic, right, but maybe a first reaction, if I may, on your side.
I can tell you that there already are some very serious questions about the use of AI, even in internal audit. I was speaking recently to someone who was a chief audit executive, and they had a co-sourcing partner, so they're as their co-sourcing partner, and I don't remember the firm's name that was helping them do the internal audit mission, and even if I did, I wouldn't use it. But what she told me, what the chief audit executive told me, is that she had received an audit report that was generated by the audit team from the firm that came in under a line item in the engagement. They came in and they did the audit. And she said as soon as she saw the report, she realized it had been written entirely by AI. And so there was really no audit work to back it up. She said once she saw the report had been written in a way that she thought certainly it had come from an AI source, one of the generative AI tools had written it. She asked for the audit work papers, and that the firm that had done the audit had no work papers to back it up, and acknowledged that they had used AI to generate it. So ethics transgressions don't lag far behind the technologies that we're dealing with. I think we have to be very, very careful in how we use AI. But believe me, I think we absolutely must use it. Any internal auditor who does not appreciate or recognize how transformational it's going to be to our very existence as a profession, I fear for their long-term success, because I believe, and I've said this over and over, that AI is going to be providing the majority, if not all, of the assurance in the future, and that's been our bread and butter for much of the history of internal audit. We've been there to provide assurance, and if you can use AI tools to provide the assurance, then we better come up with a way to contribute and add value beyond just the traditional assurance role.
Thank you, Richard, and I fully agree with you. So, Jenny, maybe if I may, back to you for the questions from the audience.
Perfect. Yes, we have so many great questions coming in. So one question that we got is, what are practical steps it would take to build ethical decision-making and behavior into an audit process in a way that is demonstrable to an external assessor in line with the GIAS?
Well, I think, I think part of what I would do if I were leading an internal audit function today is that I would take those new code of ethics. I would make sure that we built a framework for compliance with that code of ethics, and embed in that compliance framework the checks and balances, the tools that help us to determine how do we know if we are exercising due professional care. Do we ask in any kind of concrete way whether members of our team have any conflicts of interest? And conflicts of interest can be as innocuous as, maybe you have someone who goes to your church or belongs to a local fitness center. Someone works in that department. Can you be objective? Do you have the ability to be objective when you go in? So building out that compliance framework, kind of the checklist questions that need to be asked before every engagement to ensure that you don't have people on the internal audit team who are put into a position of a potential conflict of interest. There's so many things that can trip up an internal auditor that I think having the kind of tools and techniques to help ensure that they think through it. It's a mental exercise in a lot of ways to think about, before I start this audit, what are my potential conflicts? As I'm undertaking the audit, is there anything that's influencing how I evaluate the information other than objectivity and critical thinking and analysis? If anything else enters in, then I need to understand why, and do I potentially have some sort of an ethical conflict to deal with here?
Great, thank you. Another question we got was, is it possible to maintain complete independence when auditing work colleagues with whom you have good personal relationships?
Well, first of all, I think that we have a confusion of terminology there, because it's not a matter of independence, right? It's a matter of objectivity. Equally important. And this is not uncommon. I think a lot of internal auditors use independence and objectivity interchangeably when they do not mean the same thing. So independence really is about our ability to do the work we need to do without someone else interfering in that work. So internal audit as a department needs to be independent. I think what the question really is asking about is objectivity, and can I be objective, which is also one of the ethics standards. Can I be objective if I'm doing an audit in an area where I know someone really well? And I think that is a state of mind. That's where we have to step back and really ask ourselves. And that's why I would never make that call on my own. I would have that discussion with my chief audit executive. I would have that discussion with someone else. Maybe I knew the person 10 years ago. Maybe we went to school together 20 years ago. I don't know that I would have as big of an objectivity impairment as if maybe I go to a fitness facility and we exercise together every week, or our children play on a football club together and we're together 3 times a week. If I've got that kind of relationship, it might be harder for me to be objective. And we also have to consider it's not just whether I'm objective in my mind, it's what would a third party think? Could a third party, someone unrelated, look at the relationship that I have with that person and conclude that I could be objective? Look, there are some structural issues that we didn't even get into today that call into question how objective can an internal auditor be? I mean, how many of us receive some sort of incentive compensation from our companies that is directly tied to the profitability of the company? And are we able to be objective when we go in and do an audit that discloses something that might damage the profitability of the company? Would a third party look at us and say, were they objective in making a decision that they weren't going to report that? That's, now we're getting into the very essence of what internal audit is, because almost all of us, well, we all receive remuneration from the organizations we serve. That's why we are not individually independent. Do not ever tell anyone you're an independent internal auditor. Because if you're an independent internal auditor, my guess is you're not getting any kind of paycheck. We all work for our companies. We all get paid from them. We're not independent. Hopefully internal audit is independent. It's organized in the company in a way to let it carry out its work free of interference. We have to be objective. And that objectivity can be threatened or can be questioned in some instances if we're auditing something that we have a vested interest in. We may have time for one more question, Jenny. I know there are a lot of questions. I think there are more than 70 questions that have come in. By the way, I would also say this to you all. I stay very active in social media. I have written I've written over 700 articles in recent years, and I've touched on this topic of ethics in a number of different settings. Check out my website, richardchambers.com, and just type in a question in the search feature there, and it'll take you to whatever articles I've written on this. I would also invite all of you to connect with me on LinkedIn. I have about 42,000 connections, and we try and exchange ideas and insights. So feel free to connect with me there. I enjoy the dialogue. And if your question didn't get answered here today and it's a burning question for you, you could always send me a private message via LinkedIn.
Perfect. Yeah, I think we have time for about one more question. So we got a lot of questions similar to this one, asking, what do you do if the leadership of the organization does not model ethical behavior and integrity?
Well, if we say leader of the organization, if they're talking about the leader of internal audit, that's a challenge. If it's the leader of the company, if it's leadership in the company, often that's a reflection of cultural issues that are far more serious than maybe one person can tackle. But I think internal audit should be looking at culture in the organizations they serve, and they should be making their observations about culture known to the audit committee and the board. These are hugely important and very challenging issues, and I don't want anyone to leave the call today thinking that I simplified it in any way. Some of these are very, very challenging issues to think through. But if you're guided at the end of the day by what's inside of you, and that it is what you're wired for, courage and integrity, I'm confident that you'll do the right thing. It just may not always be comfortable. Thank you so much for your attention. I'll hand it back to Jenny to make a few closing remarks.
Thank you so much. For those not familiar with AuditBoard, AuditBoard provides an award-winning connected risk platform for audit, risk, IT security, and ESG teams that helps you elevate your teams, engage the front lines, and close the risk exposure gap. To learn more or schedule product walkthrough, please visit auditboard.com. And with that, we'll end today's webinar. Thank you everyone for joining us. If you have any questions, please reach out to webinars@auditboard.com. And don't forget to follow AuditBoard on LinkedIn and our other social channels to stay up to date on future events, content, and news. We hope to see you next time.